Alright everyone, and welcome back to the channel for another update. So in this episode I want to talk about the volatility and the VIX. So in about the next hour or so we're going to have the stock market over on the New York Stock Exchange open up. However, looking at some of the stock market indices, it looks like we've already got a pretty clear direction of the market before it's going to be opening. So let's talk about a few of these. This is really going to be focusing on SPX, SPY, the dollar and the VIX today for this episode. I'm going to do a TA episode on Bitcoin and probably some other cryptos later on today. However, at this moment in time, for the past couple of days, I've provided a lot of Bitcoin updates. So everyone who watches the channel should still know what I expect. I'm still expecting for us to roll back down very, very soon in terms of the BTC USD price. But let's step outside of that realm for a second and let's start off with the VIX. Now, if you haven't heard of the VIX before, this is basically the volatility index for the S&P 500. Now, a higher VIX means higher prices for options, increased uncertainty, increased risk, increased investor fear. So basically, as you can imagine, as the VIX starts to move to the upside, it's typically not good for the stock market, or it's never really good for the stock market because investors, they're hedging their bets in options. Now, at this moment in time, I'll show you specifically what I expect to play out for the VIX, and then I'll show you how this correlates over on the SPX, also known as the S&P 500. But at this moment in time, you can see if we head over to the daily time frame for the VIX is opened. This closed over on the 19th because this is obviously a stock market indice, and this is open today. This is open before a lot of other things in the stock market, and it's already up 12.5% on the day. The dollar is also open, and we'll be talking about that in a second. This is also going up, which, once again, in of itself is really not good for the rest of the stock market. On the weekly time frame, our oscillator of choice for the VIX, which is the stock RSI, has literally crossed bullish. So this looks like it's turning up very, very fast, and I definitely see continuation coming into this very, very soon. Now, once again, I've explained what the VIX is. If you do want a more in-depth perspective of what the VIX is, because I've really just brushed the surface, I recommend to head over to a website called Investopedia. They'll tell you about the definitions of all different types of things like this. But nonetheless, what I will show you is how the VIX is inversely correlated to the SPX. So if we look down here, you can see this orange line. This is simply the line graph for the SPX, also known as the S&P 500. And up above here, we have the VIX, also known as the volatility index for the S&P 500. Now, what's interesting, and when we really see the inverse correlation between these, is when we place these over the same graph. Now, to show you what I mean, what you can see is, remember once again that this is the VIX. The VIX had a massive, massive run to the upside right here, and what you'll notice is at this exact same time, the stock market was having its crash into the March 2020 capitulation. So you might be thinking, stock market headed down, VIX headed up. Why does that make sense? Well, once again, people are hedging their bets in options, and increased VIX means increased investor uncertainty, increased fear, increased risk. Basically, none of the things that you want in the traditional market. So when you've got the VIX taking a massive run to the upside, you can see that the peak in the VIX correlated to the bottom in the SPX, and then the SPX went on a massive bull run, and you can see we had one top here, we had a lower high, and quite recently it looks like we're solidifying another lower high. And when we correlate this to the VIX, you can see the VIX had a low, it had a higher low, and it had a higher low. So it's doing the complete opposite of the SPX, or should I say really the SPX is the one following the VIX, because the VIX is using option prices, taking a 30-day forward graph. So really the SPX is just slowly reacting to what's going on in the VIX, and that's why we're seeing that with this bounce in the VIX that is taking place today, that's going to be taking place this week in my opinion, this higher low we've got on this chart, the fact that we've come back to this trend line, the fact that the weekly stock RSI is starting to turn up is really not a good sign for the SPX, SPY, or really many of the other stock market indices. So just wanted to give you a quick update on that. With the VIX starting to head back up to the upside, starting to look up, we can definitely expect a lot more volatility coming in for the stock market. And one more thing I should have also said is an increased score in the VIX is typically associated with larger moves in the stock market. So if the VIX continues to rapidly move up, let's say to around about 50 or to around about 80, we should be expecting round about, I believe it's 2 2.5% moves a day on the stock market, which is very volatile for the stock market. Now, coming over to the DXY, we all know this by now, but the stock market is inversely correlated to the DXY. The DXY continues to head to the upside, and that's when you see the stock market and Bitcoin head back down. And like I've been saying for quite a while now, do not count the dollar out, because the dollar is in a massive run to the upside. On the weekly time frame, it looks like we've really only started to cross bullish. In fact, we only crossed bullish last week. We've started to gear up some momentum in the past week, and now it looks like the dollar is really ready to continue this bull run. If we look at the EMA ribbons for the dollar is above absolutely everything we need to be above. There is no concerns that I have in the higher time frames for the dollar. If we do come over to the daily time frame though, we are on the daily now, you can see that the stock RSI is pretty overbought at this moment in time. Now, I would also like to highlight there have been times, you know, you can scroll back and find this yourself to be true, but there have been times where it takes a little bit of time for the stock RSI to actually top out. So just because the stock RSI is topped out at this moment in time, you can see that, you know, over here it did take another lengthy move to the upside. So what this says to me in the immediate short term, drawing our fib from our high to low, I'd say we definitely have enough enough room to move up to about 109, completing this 100% retracement of our previous high to low. With this 100% retracement complete, we could head back down to the 61.8 region, 107. That would be a beautiful retest of the 786 Fibonacci, or the 618 is down here actually at 107. Your 786 is down here at 108. So either or of these could do. Like I'm saying, you know, in the lower time frames, it is saying that we are a bit overextended. So maybe the start of the week might be bullish, and then coming into midweek we should expect a little bit of a pullback before the next leg back up to the upside. But in the higher time frames, really no concern, and it wouldn't be something that I'd personally be looking to try and spot out to short or to hope that I could get in for a long in the traditional markets, being the SPY, or just looking at the Bitcoin price and looking to long as this comes back down. Really wouldn't be interested. It really looks like the dollar is in a parabolic uptrend to the upside, so I would not be messing with this right now. Weekly Heiken-Archies look like they're starting a beautiful new trend over on this one. So all in all, dollar looks very good. With the VIX heading to the upside, like we highlighted when we do overlay the SPX, this should correlate to continuation in the VIX and continuation back down to the downside over on the SPX. So if we do head over to the SPY and the SPX, I really only want to spend 20 seconds on this SPX fractal, because I have made multiple videos about it on my YouTube now, and I did talk about this on Twitter. But as you can see, last week I posted this over on the 18th, and we were saying, you know, the S&P 500 of 2008, which are these white bars over on this chart here, if we overlay these with the SPX, also known as the S&P 500 of today, then we should be topping out very soon. In fact, last week I said we should be topping out this week obviously being last week. So when I said this was saying that this week here we should be topping out. And coming over to the daily time frame, you can see that the overlay that I did in terms of peak to peak and trough to trough, this would be calling for the top to be in here, and this is what we were saying, and it beautifully not only called the top on the weekly time frame, but it called the top on the exact day that it happened. Now on the daily time frame, we're really starting to head down very quickly in terms of our oscillators, so we've got a lot of room to move back down to the downside. On the weekly time frame, as of today, we have only just flipped bearish. If I zoom in on this, you can see the blue line is capitulated beneath the orange line, and subsequently this is indicative of a bearish flip. You see these bearish flips, like we had one over here. You had a pretty nasty move back down to the downside before a higher high. Over here, you had a bearish flip, and you did have a very nasty move all the way back down. And now we're once again having another one of these flips while we're all the way up here. So, you know, typically when you have these flips, even if it is only a short-lived move, you're bound to have somewhat of a nasty correction back down to some lower price targets, at least for the next couple of weeks or so, because bear in mind we're on the weekly time frame right now, so some of these moves to the downside may not look too brutal, but 5.5% moves after they top out, this is definitely a move to be caught over on the SPX. So with that being said, looking at this fractal, just like we've been saying for a while, according to our 2008 stock market recession again, Fractal, this should be heading down very, very soon. And just like I said last week, I expect that we're going to be topping out. I'm doubling down on this, and I think this week we're really going to start moving down slowly, week by week, gaining more and more momentum, as in my opinion we probably do something like this, head back down for another nasty low. We're going to have a bounce back up. I don't think we're just coming right down to take out the lows. I think it's definitely going to take a month or so. We're going to lollygag down here, but this next leg to the downside on the SPX, on the SPY, on the NASDAQ, on the stock market indices is going to be brutal for Bitcoin. So if we do wrap up this video, you can also see the SPY ETF derivative of the SPX is running into resistance right now. You've got your all-time high, you've run into this was resistance again, you've got resistance here again. So what this says is anything above this line, there is a large amount of sellers looking to sell, dump, short, whatever they're trying to do. And on the weekly, once again, for the SPY, just like it is on the SPX, with shifting bearish, stock RSI has so much room to move to the downside on both the SPX and the SPY. NASDAQ looks like it's finished this double top fractal. This one definitely ran up a lot harder than the previous ones, but you can see these very clear peaks, lows, double tops, breakdown, peaks, lows, double tops, breakdowns, peaks, lows, double tops, breakdowns. So in my opinion, this should be playing out once again. And as you can see, if we correlate the peaks over on the stock RSI, you really wouldn't have wanted to go against the stock RSI when this did start to switch back down to the downside. I mean, even when it did a very small job of it over here, we had a pretty nasty move back down. For the NASDAQ, this was about a 14 to 15% move. So, you know, while some of these moves look a little bit short and dinky and short-lived, bear in mind we're on the weekly time frame, and for the NASDAQ, a 15-14% move, this is going to correlate to a massive move back down for Bitcoin. So all in all, what we've looked at is volatility is increasing for the markets. With the VIX heading up, we know that options prices are increasing. That means increased risk, increased uncertainty, increased investor fear. People are looking to hedge their bets out of the stock market using options. So an increase in the VIX, as we always see, should correlate to a decrease over in the SPX. The SPX fractal of 2008 looks like it's beautifully playing out like we called for last week. I think this is going to get more continuation to the downside. We'll find out in approximately the next hour, maybe half an hour by the time this is uploaded. NASDAQ is running into the double top resistance. SPY is also running up into this resistance, this downtrend. We've probably got something very similar playing out with the NASDAQ as well. In fact, I think we've drawn this before over on a different browser that we've got. So all in all, everything we're looking at, dollar also going up, looking like in the higher time frames it's getting ready for another macro leg up. Pairing this with everything that we've talked about, it looks very bearish for the traditional markets, and a bearish traditional markets is going to mean that Bitcoin is going to break down to lower price targets. So in the immediate short term, like I said, not a Bitcoin video, but I would be saying 618 Fibonacci, immediate short term, 20,450 is where we can see our next retest. If we do break beneath that 20,400 type region, 19,250 is the next leg to the downside. After then, a retest of 17,400 before we inevitably break back beneath these lows. And in my opinion, head down to my bear market low price targets of 16,000 US dollars. That's all I've got for you today, my friends. Hope you did enjoy today's episode looking at the volatility in the VIX. All I've got for you today. Cowboy out. Peace.